Hey everyone, and welcome back to another video for today. So it's been a couple of weeks since I've last touched on UnitedHealth, and the stock is back under $300. Not by much. Pre-market, we're at $297. Now the title might say, is this the last chance to buy UnitedHealth under $300? I don't have a crystal ball, so I'm not going to lie to you. I don't know. Could very well be, could not. But if I'm being honest, after a couple of weeks of actually reading more about it doesn't really matter. It doesn't matter if you're paying $5 extra here or $5 less there, because UnitedHealth Group, from what I am now understanding, which I understood before, but now I'm really understanding, it is a company that is not going to disappear anytime soon. Despite all the negative headlines that we've seen over the past couple of weeks and months, especially around the insurance industries, but more specifically in the healthcare space, I still think that UnitedHealth, generating $400 billion in revenue, billions of dollars in free cash flow, is still going to be here in the next couple of years and more. I also think that the stock being basically down 4% over the past 5 years, down year to date 41%, and of course over the past 3 months alone down around the same 40% or so, but over the last month it is still down 25% because it did recover a little bit from the lows mid-May. Yes, the stock should have gotten hit, but should it have gone down 40-50% so quickly? I don't think so. But that happens quite a lot in the stock market, right? Overreactions. Now, part of the reaction is justified, but the overreaction is usually not justified. And so let's revisit UnitedHealth. Let's talk a bit about what has happened more recently with regards to the CEO compensation, previous CEO, and also a lawsuit. Now, for those that don't know, UnitedHealth is a company worth $268 billion, a PE of 12.6 times and a forward one of 13.1 times. The average analyst price target does sit at $388. This is a company with gross margins of around 22%, EBITDA margins of 8.8%, operating margins of 8.2%, net margins of 5.4%, and free cash flow margins of 6.1%. That's over a 4-quarter period. The analysts are expecting this company to grow revenue by 9.6%, that's forward 2 years out, and EPS actually is expected to come down 1.7%. Of course, for guidance for this year, we can actually look at the transcript here on FinChat and see what they've told us a couple of days ago. So the key highlights, of course, is suspension of financial guidance until the second quarter report on July 29th. So we're going to get way more information there. Establishment of a prudent 2025 earnings outlook and initial perspective for 2026 to be provided on that same date. So keep that date in mind, because I do think that the stock will move on that date. Whether it's going to be positive or negative depends on the information that they'll provide us. But the more information that we get, the less uncertainty around the stock, which I'd probably say that the stock will react positively. The focus will be on margin improvement in Medicare Advantage pricing. The CEO compensation package includes a $1 million annual salary for 3 years and a one-time equity award valued at $60 million in non-qualified stock options with a 3-year cliff vesting schedule. We've talked about that in the previous video. So before continuing, if you enjoy this type of videos, hit all the buttons, especially the subscribe one. Really appreciate that. If you want to support me even further, do check out the link down in the description and in the pinned comments with the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. All right, so when you look at the UnitedHealth business, you have 2 revenue segments, Total Optum and the United Healthcare. Of course, that part is the biggest chunk right here. And the same goes for operating income, although with operating income, the split between the two is a bit more balanced. Now, over the past couple of years, if you look at total United Healthcare medical individuals served, yes, that has increased, but that did decrease since the peak back here, March quarter of 2023. It did drop, but since the June quarter of 2024, we have seen a small increase. Now, over a longer period of time, 10 years, and then we look out the next couple of fiscal years, fiscal 25, 26, 27, you can clearly see, okay, revenue is expected to grow, like we said, around, let's call it 10% or so. And EPS actually is still expected to increase, might not be increased as fast as before. You might be asking, what has happened here in 2024? Well, in 2024, you had a mix of a couple of things. You had that cyber attack, which cost them quite a lot of money, cost them and some of their partners as well. So I think they did some loans. So it hurt free cash flow, it hurt net income during that period, which you will see in just a bit. If we look at free cash flow here, you can see for 2024, it got hit. And the stock took a beating. But normally the stock does follow, well, the uptrend, free cash flow going up. So yeah, the stock did follow. Yeah, we did see a dip here in 2024. But then it did go up quite significantly in 25. And then, of course, now we've had that huge crash, which at the moment is not justified, because at the moment we are not going to see such a big drop, right? Previously, okay, the stock dropped because we've seen free cash flow drop. Now, for this to make sense, well, free cash flow will have to drop quite significantly, and revenue as well, gross profit as well. I just don't see that happening. Now here as well, if we look at the last 10 years, we look at gross profit margin here at the top, and we look at free cash flow margin at the bottom. Gross profit margin has taken a hit over the last couple of years. Free cash flow margin has come down a little bit as well. And here, yeah, 2024, you can see that it has gotten hit, but it did rebound already in 2025. For now, 6.1%. It's higher than the 5.2% we've had in 2024, but gross profit margin does come down. Now here you can visualize it even better. Free cash flow and net income, clearly 2024 was an outlier year. Well, negatively, of course. And of course, there was also a surge in medical utilization and cost, especially Medicare Advantage and increased regulatory scrutiny. So you mix all of that, and that's what you get here in 2024. Now, looking at the pricing metrics, more specifically, I'm not even looking at forward one, I'm just looking at the trailing one. So PE right now, trailing PE 12.4. The average was 23.4, but of course, we've had that huge increase here, well, because of the impact that I've just spoken about. So let's say it shouldn't be trading, right, that high. Let's say it should be trading around, let's call it 18, right, 18 times. We still have quite a long way to go to reach that 18 times. So multiple expansion is definitely possible. If we look at forward price to free cash flow, in this case forwards, because I want to mix it up a little bit, 10 times right now, the average sits at 16.4. But here as well, let's say the 16.4 average is being impacted by a couple of times where the stock did go up or free cash flow did disappear a little bit. So, okay, let's say, 15, 14 times, maybe even 13 times. Here as well, we can get multiple expansion, which of course will pull the stock up. Now, more recently, we've had a couple of announcements. One, UnitedHealth Group's board committee canceled former CEO Andrew Whitty's performance-based restricted stock units. Whitty abruptly resigned in May, leading to a sharp drop in UnitedHealth shares and the withdrawal of its full year's earnings outlook. The cancellation of Whitty's equity compensation was decided on June 2nd. Whitty, formerly CEO of GSK, agreed to the cancellation. Then, of course, we've had the shareholders that approved a compensation package for the return of the new old CEO, Stephen Hemsley. Hemsley's package included $1 million in annual salary and $60 million in stock options. Hemsley, previously the company's chairman, replaced Andrew Whitty as CEO after, he resigned last month. Hemsley took over during multiple crises for UnitedHealth, including, of course, Whitty's departure, the suspension of 2025 outlook due to increased medical care activity, and public scrutiny over business practices. Reports detail concern over UnitedHealth secretly paying nursing homes for Medicare enrollees and cutting hospital transfers, and a Department of Justice criminal investigation into potential Medicare fraud. So, we spoke about that before, and those are the reasons why the stock is down quite severely this year. But the company did state that it expects to return to growth next year. And then the last part here, which was news that came out today, UnitedHealth Group has filed a defamation lawsuit against The Guardian. The lawsuit is in response to a May report by The Guardian that accused UnitedHealth of secretly paying nursing homes to gain Medicare members and reduce hospital transfers for sick patients. Filed in Delaware Superior Court, interesting place, the lawsuit alleges The Guardian knowingly published false information and tried to profit from the tragic murder of Brian Thompson, the former CEO. The Guardian stated it will defend itself in court and stands by its May 21 report, citing corporate and patient records, interviews with former employees, and other documentary evidence. The Guardian called UnitedHealth's lawsuit outrageous and an intimidation tactic against factual reporting. I think The Guardian is probably going to be the last place where I go for factual reporting, but that's just me. And so, to conclude, is UnitedHealth still a good turnaround story, a good option to pick up, right? To diversify if you have a tech-heavy portfolio? I think so. This is not personal financial advice. I personally do not own a name like UnitedHealth or UnitedHealth in my portfolio at the time of making this video. It is definitely very tempting, especially if I would be looking to diversify my exposure in the portfolio. If I will be buying, I will of course let you know in the portfolio updates on Sunday. At the moment, I have no position. It is very tempting. I'm not gonna lie, it's very tempting because I do think that the major impact on the stock is behind us. And this is again one of those companies, yes, of course, it still faces some future, let's say, headwinds. But like I said, this is a very important company, generates $400 billion, free cash flow in the billions as well. New old CEO coming back, trying to stabilize this whole thing. I think the worst is behind us and I could see this stock outperform from here on out. So all in all, that's about it. Do share your thoughts down in the comment section below. Like, subscribe, do all of that, and I'll see you all in the next one. Bye-bye.